So the largest impact of the terror attacks is likely to be on the tourism sector. Reports from the industry itself is noting that there might be a loss of about 30% in terms of the tourist arrivals, but it's likely that the impact on tourism earnings could be a lot more pronounced than in terms of the arrivals itself. The issue is, even if tourist arrivals do recover maybe in a year or a year and a half, with efforts taken now, tourism earnings would still take much longer to recover, because they'll have to sort of bring back and attract tourists through discounted rates in terms of hotel stays, airfares, things like that. Will need to be a discounted rate, and this means that the recovery of tourist earnings back to these 4 billion levels will take a lot longer to happen. But apart from that, in terms of foreign direct investments as well, there's likely to be a bit of a slowdown. The immediate impact, of course, is difficult to assess, because it really depends on how long sort of tensions continue, and whether the investors are like to sort of pull out their money or slow down the investments that have been originally planned. But of course, there's still likely to be less foreign direct investments compared to the 2.1 billion which was achieved last year. But in terms of foreign direct investments into things like the telecommunication sector and the tech sector, we might still see those investments coming in, just as we did see sort of during the Civil War times as well, that these investments didn't really slow down as much. Apart from that, again, demand conditions. Of course, we saw the last 2 years, because of the fiscal tightening, demand conditions were very repressed during the last 2 years. Company earnings were seeing a hit, and consumer sentiment was overall on a low. And just as we started sort of seeing a little bit of a pickup that was reported around December of last year, going back into these conditions means that they're going to see a much more prolonged effect, and it's going to take much longer for businesses to now recover and for consumers to actually start spending more. So this affects not only the large businesses and not only the tourism sector, but also things like food and beverages. A lot less people are going out to the streets to go out. Even small businesses, in terms of things like the social media bans, is really affecting a lot of the small businesses that really depend on this. So overall, demand conditions are likely to be low. And following on from that, this also means that imports are likely to be a lot more contained this year. At the start of this year, it was already sort of seeing a bit of a slowdown, given the import controls that we saw towards the end of last year, as well as the high depreciation. And we also saw private sector credit really turning negative in January, and has been quite low even February and March. And this has really affected imports even before these attacks happened. But going forward, because of sort of the depressed business conditions, we could see imports reducing overall. So in terms of the current account itself, it's really a balance between the loss in tourism earnings as well as the reduction in import earnings. That will really depend on how the current account will factor going on. But going forward, because the balance of payments on the current account might be in a little bit more distress, it's possible that the LKR would really not appreciate much more, and could in fact turn around into a more depreciation path going forward as well. Plus, if measures are not taken quickly to sort of contain investor sentiment turning negative, it could result in more foreign outflows and people pulling out their money, which could in fact impact it even further.
The immediate impact of the attack would be felt by, as we all know, the tourism sector as well as the related activities of the tourism sector, because tourism sector is one of the industries which is very sensitive to these security conditions, internally as well as globally. Apart from that, actually it will have multiple effects on the overall economy in terms of production, employment, as well as in terms of investment. So things depend on how much we build up the confidence on rectifying and achieving these economic goals.
Moving into some of the other areas which has seen impact, I think has largely been in terms of retail and some of the value chains which are associated with the tourism industry. What is also of concerning, I think, is given the low growth environment that we saw pre the 21st of April, what the impact will now be on growth. The government was ambitious, central bank also was ambitious to get growth above 4% for this year, after seeing 2 years of growth below 4%. But this shock, as it were, will definitely dampen those chances. And now I think the forecast sees somewhere between 2.5 to maybe 3% for growth this year, which is going to be another disappointing year of subdued growth. What we also will have to counter in is the impact in terms of balance of payments, because such an attack like this does have an impact on terms of investor confidence and in terms of FDIs and things like that. So how will we manage to negate that with the balance of payments position? And that's something that the central bank will have to proactively work towards.